Happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties, another Monday market moment. And today we are going to look at the temperature of the market. What is the temperature of the market? So you can be an expert on talking about real estate just by listening to this episode of the Monday Market Moment. We'll answer that question in a moment, but first the totals. Right now we have 3,127 homes for sale. It's a pretty healthy increase of 116 from last week, with no change in the median list price of those homes, $999, $999. Average days on market, 44, one fewer day than last week. Pending sales, 2309, a drop of 30 from last week. Median list price, 889, and then that's higher than it was the week before. No change in the average days on market, 24. Months of inventory, slightly higher, up to 1.58, was 1.52. So still well within seller's market territory. Here's the chart showing total actives and total pendings. We had seen total actives declining a little bit. It jumped up as we're entering the spring market. Kind of we expected, demand a little bit off from before. All right, since last week, we saw 830 homes come on the market. It's a huge increase of 241. So it seems like people maybe read the Monday or saw the Monday market moment last week when I talked about the best time to sell a home is coming up soon. So people jumped in and started doing it. Median list price $979, higher than the week before. New pendings $370, down 53. So big swings here. A huge increase in new actives and a decent sized decrease. Over 10% fewer homes went into escrow last week than the week before. Median list price $875, lower than the week before. Average days on market 19, one more day than the week before. New pendings listed within the last week 29, and new pendings listed within the last 2 weeks 170. So interestingly, more homes sold in a week or less than did the week before, but fewer homes sold in 2 weeks or less than the week before. Interesting dichotomy there. And then since last week, we saw 349 homes close escrow, 55 fewer than the week before. Big drop. 875 was the median list price, lower than the week before, but median sales price was up to $910,000, so higher than the week before. Average days on market for the homes that closed escrow last week, 19, 3 fewer days. So on the median, or rather on the average, homes are selling in less than 3 weeks still. Least expensive sale was in Fallbrook, $228,000, and the most expensive sale was in La Jolla, $13.5 million. Here's a chart showing new actives, new pendings, and new closed sales. You can see last week how we had the new actives and new pendings was not a huge difference, slightly, but I mean, but not that big. But versus this week, huge difference between the number of homes coming on the market versus the ones going under contract. I wonder if that's going to continue or if it'll even out a little bit. Here is the chart showing the median list price and the median sales price. And again, probably the biggest margin between the two than we've seen in quite a while. Big jump in the difference between those two. All right, here's the Stephen Thomas reports on housing for last week. I'm doing the slides in a little bit different order than I usually do. We're going to first look at the market breakdown. And if you look at the market time and then the percentage of current inventory versus percentage of current demand, you can kind of see where the hot spots are in the market right now. And you can see 30% of the current inventory is priced under 750,000. So the biggest percentage of homes that are out there right now are in that category, and also the highest current demand, highest percentage of current demand. But there's still more demand than supply. When we get to 750 to a million, 19% of the homes are in that price category, and 28% of the demand. So that's actually the biggest discrepancy between supply and demand is in that 750 to $1 million category. So that's where you're going to be if you're a seller. That's where you're going to probably have multiple offers, people lining up for your open house, etc. The differences narrow when you start getting over $1 million. You have 8% of the current inventory is in that category, 11% current demand. So still more demand than supply. And then it switches to more supply than demand once we go above $1.25 million. Interestingly, over $4 million, current supply is 5%, but current demand is 2%. Not a huge difference there. It's good to see for the people who have expensive homes. So here is the current active listings. You can see relative to the last few years, you can see where we're at with inventory. And we're higher than we have been in the last few years. But you can see in the green, the 3-year average, we're still well below that 3-year average from 2017 to 2019. But the trajectory of inventory is going in a different direction than it was last year and the years before, kind of heading down, it seems like. Versus demand, which is the number of homes that go pending in the last 30 days, you can see we're among the lowest demand that we've seen in the last few years. Coming up a little bit according to this chart, but we'll see, what we looked at the earlier charts where way more homes came on the market and fewer homes went pending. We'll see if this continues here. But you can see the purple line relative to last year, very similar to last year. Still don't have a lot of supply. So temperature of the market, Stephen likes to look at the temperature of the market as the current inventory versus demand, homes in the last 30 days that went pending. And he looked at history of the last several years. You can see the difference between those two numbers, inventory versus demand. And today's difference, you can see right here, is listed right here versus, in the years past. And really the temperature of the market is hot based on the fact that we don't have a lot of homes for sale. And we have pretty decent demand, but not super strong demand. But again, it's that low inventory that's keeping the market hot. You can see where inventory was, active listings is the lighter blue versus, and then as you can see right here where we are, among the lowest inventory we've ever seen versus demand. And even when we had, low supply in a couple of years ago, the demand was also low. So again, bottom line is the temperature of the market really based on inventory versus demand. And as long as we still have not a lot of inventory, even with demand a little bit muted, with rates being higher, but I think that people are getting used to those rates in the 6.5% to 7% range. People are kind of used to it now. They're out making purchasing decisions on whatever little inventory there is out there. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions about this report or the market or what it might mean for you, feel free to give me a call, send me an email. Happy to answer any questions you might have. That's it for this week's Monday Market Moment. Hope you have a great day. Look forward to seeing you next Monday.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this week's report, send an email to brian@devorerealtygroup.com.